Hello, and thank you for joining us. We are your SBN Phoenix Multifamily Advisors. I'm Carrick.
And I'm Vicente Cantua.
Today, we want to give you a video overview of our SBN Multifamily dashboard. And if you haven't had the chance to read our dashboard that came out summarizing the end of 2017 multifamily market here in Phoenix and some of the 2018 highlights, today we're just going to go over some of those highlights with you so you can have a better understanding of what's going on in our market. One of the things we would like to point out is that we have good income growth in our market. In fact, last year, our income growth was around 7% when we look at the salary growth of workers, those who are in the workforce here in the Phoenix area. And then we have employment growth of over 2%. And this is good because we also have population growth of around just over 2% as well. We had about 75,000 people move here to Phoenix last year, as well as burst. The overall population grew nicely, and when you can combine the population growth with income growth and employment growth, that's really the trifecta of the growth that we look for in a successful, healthy multifamily market.
So if you look at the rents that we're seeing year over year, we are seeing a little bit lower prices and a little bit lower percentages that we've seen in the last couple of years. So if you look at the very top of your luxury, you're seeing about $1,300 for the average rents. It's about $35 more than the year before. And then if you look at your maybe A minus B plus property, you're seeing about $43 increase, about 4% increase year over year. If you head down to your B minus properties, you're still seeing that $30 or so rent increase, again almost 4%. And as you go to your lower C plus C apartments, you're seeing your highest rent growth there at a little over 5.5%, or right at 5.5% pretty much. And then last year, we actually saw the highest rent increases in the workforce, the very C minus properties. But this year, or the year that's passed before us, we're actually seeing only a $14 increase and only 2%. So things are shifting a little, but overall we're seeing just a little bit more rent growth, but nothing crazy like we saw in 2015, 2016 year over year.
In fact, last year, Vicente, Glendale had one of the highest rent growths in the nation, correct?
Yep, that was in April, actually, 11.4%, which was the highest rent growth in the entire nation.
So we are seeing a lot of rent growth in the West Valley and these Class C apartments, as you can see here.
Exactly. And then so we like to highlight two different segments of the apartment market. You have your 1099 units, and then you also 100 units and above. So what we saw is a little bit of a decrease in the transaction volume, just about 5%, but we saw a major increase in the price per unit, up 34% year over year, and the price per square foot up 23% year over year. And we also like to highlight some of the top transactions. So you'll see here the Markley on 32nd Street. That was 27 units, and it sold for $174,000 a door, which was the highest smaller mid-sized apartment that traded last year.
Mm-hmm. And here with the Devron, we're at $216 a square foot, so definitely approaching around $200 a square foot for older, smaller apartment buildings that have been fixed up and remodeled. When we look at our 100-plus unit properties that traded last year, our volume was $4.7 billion, and then in 2017 it was $4.3 billion, so we saw about a $400 million decrease, or about 10% lower volume. Overall, though, we definitely demand did exceed supply, and it brought the prices up. We had a price per unit increase of about 11%, and then price per square foot up by about 13%. When we look at some of the top three transactions by price per unit, the Cottages was at the top, selling for $471,000 per unit in Tempe, and it was a property that was built in 2015. Very nice Class A property in a great location. So one of the things we always like to take a look at is our construction pipeline, and looking at what's in the pipeline, what's come out of the pipeline. In fourth quarter, October, November, December, those 3 months, we saw 2,400 units that were delivered. And those were 10 different properties. There we have the list of the 10 properties with the units that were delivered. Overall, in 2017, we saw 6,500 units be delivered to the market. And as far as what's in store, under construction, we have 17,000 units that are currently being worked on with the expectation of being delivered over the next 24 months. And then 11,000 units that are still planned in the pipeline but haven't started shoveling the ground at this point in time yet.
And then if you want to look where exactly those units are being built, we are seeing the majority of them are in Central Phoenix. So almost a third of them are in Central Phoenix. And then throughout the valley, you have your certain submarkets that you'll see here, and they're all fairly balanced, nothing too crazy. We do have 8% in Mesa, Scottsdale at 12%, and the second highest would be Tempe at 16%. And overall, just a little over 41,000 units that are currently under construction.
So we get a lot of questions about what's in store for 2018. And so here we put a nice picture together of what we believe is a realistic forecast for this year. We definitely have good expectations that the Fed will increase rates, and that will drive our multifamily interest rates up a bit and put some pressure on cap rates, certainly. We also see rents continuing to rise in the healthy range of probably around 3 to 4%. And we think occupancy will probably be down a basis point as the Class A apartments are brought into the market and taking a few months for those to absorb. We see employment up, just like it was this year, continuing to add jobs and a lot of business expansion and development here in Phoenix. Transaction volume, we're expecting to be relatively flat to this year. And our price per unit basis, we continue to have demand increasing supply, so we do see our price per unit continuing to increase just as it has this year. And overall building permits we expect to be down. A lot of the units that are under construction are going to be finished and completed, and we believe that the new construction starts will be at a lower pace. And that summarizes our forecast for 2018. As always, we're your multifamily advisors here in Phoenix. Please don't hesitate to reach out to us if myself or Vicente can be of service to you. We're just a phone call away. Thanks for your time.
Great day.